Welcome to the Real Estate Baller Show. If you ever like any of the video we posted, if you like this channel, can you do me a favor and hit that subscribe button? It helps us more than you know. And the bigger this channel get, the more people we can help achieve financial freedom. Thank you and enjoy the episode.
So you found your first deal, you locked it up, you funded it, and then you sold it to a local investor that your mentor connected you with, right?
I'm not sure. It I may have run into this investor at a networking event or something like that.
Okay. And then he turned it into a rental, or did he flip it? Do you know what he did?
Oh, you mean this local investor? No, I did not know this local investor at the time. They made an offer through the MLS. I had it listed on MLS after I did a good job cleaning it up. I didn't do any rehab, any repairs. Like I said, I didn't want to get into, it was a big rehab for me at the time.
Right.
So I just cleaned it up. I put it on MLS, which is strategy I still use a lot today. Clean it up, put it on the MLS, and this investor came, offer, we got under contract and they closed.
And when you clean it up and put it on the MLS, what you're typically trying to do is price it lower than the cost of a fully rehabbed house, right?
So what you do is you look at all the actives and then you price your property to where it makes sense. And I know it's vague, but you look at all the active and you price it to where it looks like a really good deal, which it is a good deal. Right? Because it's still cheaper. It's cheaper than all the other stuff on the market of similar condition. That makes sense. So you price it competitively. And when I put it on the MLS on that Saturday, I was still working at the time at a full-time job, my other business. And the phone was just ringing and ringing and buzzing all day. And that was when I was like, oh, wow. Okay, so maybe I get this sold. Yeah, so the phone was buzzing all day. I was with customer and I gotta take this call. So that's the strategy. When you clean it up really well, you cut out the bad stuff if it's really bad. Like I said, spend a lot of money cleaning out the yard to where it's easy for people to envision what they're gonna do with the property. And then I'll sell it as is like that.
I see. And what year was this? Do you remember?
2014.
2014. If you put a property on the market and no one's calling you and no one's going to view it, we know we've overpriced it.
Yeah.
And it depends on the situation. But for me, I never want the highest dollar amount for my house. I just want it to sell. And so you've priced it properly when people are calling, doing showings. So you priced it very well, especially for a first-time deal. I see a lot of first-timers you had really good mentorship, because a lot of newbies might look at where comps and where things are selling, and they say, I just want the absolute most out of this. I got to get the most out of my first deal. And then it ends up sitting, and you're paying money, and you're holding it, and then you start to lose interest in being a real estate investor. So I'm glad you had good mentorship and priced it properly.
There's good common sense and obviously good guidance. But I'll tell you what, now after years, sometimes I get greedy, right? Because I price them right and then they sell too fast and then I get greedy and I was like, okay, let's just price it up a little. And I end up making less money on those houses. So
I've done the same thing. I've done the same thing. You price a property 10,000 more or even 5,000 more than it should be, and then it sits for a few months. And then the offers you get, sometimes, not always, but sometimes the offers you get are by less qualified people that are like, I'll pay you this high price if you deal with all of my paperwork issues, or I don't know if I can get a loan, I don't have any money. And so I also notice when I overprice rent both houses for lease and selling houses, I've gotten some very low quality, like weak buyers or weak residents that want to move in. So I've learned it's all about pricing it right, and I fell into that same trap. However, V, you've earned the right to do at that point, I would call that price discovery. When you're a newbie and you try to overprice it, you're being greedy. But when you've done a lot of deals, you've got money, you've got experience, you have reserves, and you can hold the property, you've earned the right to do some price discovery. So I wouldn't call it greedy at your current level of experience. I would call it
It's all right, Michael. We'll just call it what it is.
Greed.
What's that? Greed is good.
Yeah, greed is good until you lose money on a deal. then it's not good.
Hey, thanks for tuning in today. I do have a favor to ask. If you enjoyed this video, please don't forget to like, subscribe, and hit that notification bell to stay updated with more amazing stories and insights from REBallers. Thank you so much, and we'll see you in the next video. This episode is brought to you by Jet Lending. For over 20 years, Jet Lending has been helping real estate investors succeed. They offer 100% financing so you can be in at $0 at closing. I can always count on Jet Lending to fund my deals. If you're looking to fund your next deal, contact our friend over at jetlending.com.